Hey guys, Josh Linville here. I'm the Vice President of the Fertilizer Division for StoneX Financial Inc., FCM Division. This is, I believe, the first official market commentary related YouTube video I'll be doing. So June 18th, 2024. And yeah, just wanted to go through the markets a little bit and kind of talk about some of the things that we are seeing, some of the things that we're watching for. And this is typically a time of year where the markets get very, very quiet. And you know how it is. I mean, if you're sitting here in the Northern Hemisphere, it's getting hot, muggy, things are planted. Yeah, you got some spraying and things like that. But from a fertilizer perspective, most everything's done. We are actually spending a lot of effort here internally, starting to look at the markets in terms of what do we expect for the fertilizer year 2025. And fertilizer years go from July through June. So next year starts here in a couple weeks. And we're already looking ahead on that. But there have been a few interesting things happening around the world that are starting to kind of drive some of these prices, ebb and flow a little bit. So I want to go through that, just hit on the highlights of it very, very quickly. From a global perspective for the nitrogen markets, demand has gone kind of quiet. And this is more on the urea side. We've seen urea prices be very, very strong here for the last few weeks. And in fact, a lot of the major production or origin points around the world have seen their prices up 65, 75, $85 a ton in a few short weeks. And a lot of that was started with Egypt. They started a lot of the sales. They were making a lot of shipments up to Europe on farmer demand. You got traders who were covering short sales, things like that. And then it just kind of took a life of its own. It's just buy, 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 buy. Well, Egypt, during the middle of all that, their production stopped. And that's because they had the heat wave, a lot of public demand on natural gas. And so when that happens, the government says, hey, we've only got so much supply. We're going to push all this to the public side. They need to be able to survive, obviously speaking. And production takes the hit. Production has to slow down, has to stop. Originally, they sat there and said, slow down by 20%. And then they said, nope, we're shutting off all the supplies. Just shut off your production for the time being. And that really set everything on fire as far as prices going up around the world. Well, later last week, now we started to see those natural gas supplies starting to come back. And now we've got Egyptian production. The estimates out there are 60, 80% of normal. So they're not quite 100%, but it is a good reminder that, hey, it's a short-term event. Yeah, it's exciting while it happened, but short-term, we haven't seen prices off just yet, but fertilizer doesn't do very well when it gets quiet. It's way too much time for this market to sit around and contemplate. When things like that start happening, it's very easy to justify, well, I have to drop my price $3, I might get a sale, $5 I might get a sale. Then you start getting these guys back and forth, starting to try and step over themselves, trying to get another sale put on out there. There are a lot of questions in terms of Chinese exports. Now, China, typically speaking, historically normal, represents about 10% of the global urea export supply out there. And the Chinese government has basically stepped in and said, you're not exporting. We're going to keep tons at home. We're going to keep the price low. We're going to keep supplies good. And they've been doing it. It's the Chinese government. When they tell you to do something, they do it. And so their production rates have remained high, but they're not exporting. And that is something that's a rock and a hard place type situation they're going to have to figure out. They're either going to have to slow down production or allow exports here fairly soon. And that's something we're watching. And the reason why it's so important to the global market right now, there's a little bit of support because China isn't there. They're kind of the boogeyman of the urea marketplace globally. And so when they're not there, everybody's a little more free to move that price up. However, when they start to come back, everybody's a little bit more scared, a little bit more timid, a little bit more aggressive on their price because they really want to make sure they don't get beat by those guys. So we need to watch and see when those guys come back. Brazil, their production, not a huge amount of production, but for them, it's a big thing that does need to be replaced while it's offline. And so far, we still hear that they're offline. Natural gas prices are just too high for them to operate and make any money. And lastly, Europe is still 75% of normal. And the reason we talk so much about Europe is when you look over the last few years, their Dutch TTF, their natural gas market is what's really set the world. And so take a look at this. This graph, because I had this question asked so many times, like, well, Josh, the Henry Hub price in North America has been flat. It's down. So prices should be lower. And so we made this graph to show Europe is kind of our price point around the world right now. So that blue line at the bottom, the one that doesn't do anything, that's your Henry Hub. That green one right there, that's your Dutch TTF, your European natural gas price. And the red is NOLA. I wanted to show NOLA, New Orleans, Louisiana urea pricing in relation to this to show that even though that green line is a European price, there's a lot more of a connection on those ebbs and flows between it and the Dutch TTF than there is between NOLA urea and Henry Hub. So we watch Europe very, very closely, and more specifically, the Dutch TTF. And unfortunately, those values have been continuing to hold $10, $11, $12 an MMBTU. We were hopeful we were going to see the rest of that production turn on. We have not seen that yet. Kind of losing hope it'll happen, but hey, miracles have happened before. If you're asking questions about why haven't I heard from my retailer in terms of anhydrous programs, why haven't I heard how what price I can fill my nurse bottles? Why haven't I heard my fall shipment price? Well, it's because they haven't been released yet. Anhydrous, there's two major parties who control the vast majority of the North American marketplace, and they haven't come out yet. The market is still waiting. It was a little bit over a year ago today that last year's programs got released, so we're expecting these things anytime now. This week, we've got Juneteenth coming up tomorrow, this Wednesday. We thought we would see them honestly yesterday. We thought we'd try and get them out there before the holiday. Maybe we'll see them Thursday, but I would say here in the next couple of weeks, you'll probably hear something, but just don't beat your retail up too bad. They're not the ones setting it. They want it just as bad as you do. The programs just haven't been released yet. Phosphate market. Global markets continue to be supported by demand. And this is a little bit fascinating. Phosphate prices, for lack of a better word, is too freaking high. When you look at it versus all the grains out there, it's very, very high priced. But we still see demand. Right now, we've got a few buyers that have been stepping up. And it's been interesting because we really thought we'd see prices down a little bit. And the reason I say I thought we'd see them down, I still kind of hold on to this storyline, is exports and supplies seem to be getting normal. There's 5 major players in the global market for phosphate. Number 1 is Morocco. Their exports are normal. Number 2, China. Now, China is typically number 1. They are the world's leader as far as exports normally, but they've been scaled back. Same thing we talked about on the urea side. But their exports are improving. They're getting back to normal. Not quite there, but they're doing better. Saudi Arabia is normal. Russia has actually been exporting more here the last couple of years since the invasion of Ukraine. There's people speculating that that's a way to bring in more cash to support that war on Ukraine. There's probably some truth to it, but they're doing better than what we expected them to do. U.S. exports are lower. We have our production rates that are improving. They've production struggled here the last couple quarters, but it should be back to normal here Q3. And exports are going to be lower because the U.S. is kind of in a weird spot right now with all the duties on so many of the places around the world. So when I look at these top 5 and we see a lot of improvement out there and we don't see anything moving on the price just yet, it just makes us think there's got to be something changing here fairly soon. So why are North America values so high in relation to the rest of the world? And just for reference, here's what we're looking at as far as the top 5 countries in the world. Like I said in the list, Morocco, China, Saudi Arabia, Russia, US. Well, the problem is we're in a weird spot. The US has got countervailing duties. We've got 25% duties against China. Those were implemented during the Trump administration. Morocco and Russia were implemented back in 2020, early 21. So during the Biden administration. US is obviously US, we are ourselves. And then there's Saudi Arabia. No duties, nothing wrong with them. They can come here freely. Well, the problem with that, it's not exactly competition, if you will. A major phosphate manufacturer in the US has a 25% controlling interest in that facility. Now, they recently sold that to a company called Ma'aden, the partner with that phosphate mine over in Saudi Arabia. But they were paid in Ma'aden stock and they have to hold that stock for 3 years. So it doesn't really behoove them to go cut the marketplace just for the heck of it. So, guys, those 5 countries right there account for 85% of the global export market. And people are usually like, well, that's fine. I'll just go find it from somewhere else. Where? Number 6 is Jordan. They didn't even export 600,000 tons in the 2023 calendar year. Number 7 is Australia, barely over 300,000 ton. So you go through all the other phosphate exporters around the world, it's hard to come up with much more than 1 million tons of export total outside of those top 5. So that's what makes it very, very hard. And that's why we're seeing the US at such a huge premium versus the rest of the world. Now, for some reason, Brazil has been following us here recently. They're really wanting to get their hands on more product as well. But this isn't normal. Typically speaking, NOLA, DAP, and MAP prices are largely in line to the lower end of global values. And that, if I were to run this chart back before 2020, when all these countervailing duty rates started, you would see that. It isn't often that you see NOLA, New Orleans, Louisiana, move to a huge premium versus the rest of the world. But it has become much, much more normal because we've got a lot of supply situations. And you go talk to any retailers, and a lot of farmers will tell you, it's just very, very hard to get your hands on from time to time. And there's people buying stuff right now saying, I hate the price, but I got to get started getting filled for the fall season. November, with as tight as things are, is literally around the corner. And talking about how high priced things are, this graph is looking at how many bushels of corn it takes to pay for 1 ton of DAP. Now, I'm looking at New Orleans, Louisiana DAP and Chicago corn. Your values are going to look different. I would honestly challenge you to go have this conversation with your local retailer. We've got a lot of guys that use this program. If you want to try and find something near you that looks at it from this perspective, reach out to us. Email me, josh.linville@stonex.com. We'll get you hooked up with somebody relatively local, because your local number is going to be much more important based on basis and things like that. But this graph goes back to 2018. And it's every single week I do this correlation and look at how many bushels per ton of DAP, because again, inputs, outputs, farming is manufacturing. And so that's the way I look at it. Those two lines, horizontal lines, that's your middle 50% of data points. So anything at the lower end of that line, that's the best 25% values out there. Anything above it is the worst 25%. And guys, right now, that top line is very close to where we are today. We are not sitting very good with where phosphate prices are versus the price of corn. It's a very poor ratio. Now, that does not mean it has to drop anytime soon. Chances are it's probably going to hold up here for a little while, but just to give you a perspective of just how poor it is. Worse is MAP. Now, it's a problem. At least DAP, you can find a few other places around the world to find DAP. MAP gets much, much harder. So it is holding a much higher premium. So if you're sitting there saying, why in the world is my MAP price so high compared to some DAP user? It's that inventory. That S&D is so much more jacked up than DAP even is. For reference, that number is firmly in the top 25%. That ratio is currently sitting at about 126. And that's, I think 124 is the start of that top 25%. So phosphate's in a very, very high cost situation. I'm never going to sit there and say, you need to do this, or you need to do that. But I would very much recommend take a look at the soil, look at the samples, talk with your retailers. How much phosphate do you need? When do you have to put it on? Because this is a real, real bad place to be. Anytime those values start to get in the gray box or even below, that's a decent place to be. But where we're at today, very, very tough situation. And potash, same thing. If you're wondering why you've not heard anything from your retailer, it's because they don't have anything yet. We've not seen it from the Canadian manufacturers yet. And frankly, it makes sense. Canada Rail is, and the union is continuing to fight. They continue on these negotiations back and forth. And if I'm a manufacturer, I'm going to put myself in their shoes. If I'm a manufacturer and I don't know if rail is going to be operating or not, chances are it's going to. But if I'm not certain it's going to, I'm not going to roll a program out yet. I'm going to wait until the thing is finalized. And it should be, even though those two parties refuse to come together, eventually the government or somebody else is going to step in and say, no, we've got to rectify this. It's too important to Canada for this to shut down. We've got to find common ground. Let's find it and move on. So we're not expecting a real long-term situation. But if you don't have to go out with the program right now, just wait, just drag your feet. And I think that's what they're really doing today. We are expecting a decent price on the fill program just based on a lot of the factors we're seeing, but we got to wait and see what they actually do. So, guys, that's the markets in a nutshell this week. Like I said, a little bit more going on this week than what I thought there would be. So we'll keep tabs on it. I'm going to keep trying to get these videos out once a week. Next week's video will probably be from the road, from a hotel room or something. Hitting the road again. Had a few months home while the following the winter travel schedule, but now I got to get after it for the summer. But please take a look, stonex.com. Take a look there. If you're on Twitter, I try to put stuff out there every day. My handle is at jlinvillefert. And if you want more details, we do a monthly farmer fertilizer subscription, and you can go Google that at StoneX Farmer Fertilizer Newsletter. That will go into a lot more detail. I'll give you a little bit more thought on what my expectations are for pricing, things like that, things to look out for. Try to go a lot more in depth. So take a look there if you're interested. Otherwise, guys, appreciate it. We'll talk at you next week.